All right, let's jump into it. It is 10:44 on 12th of February, Thursday. So try and make this maybe a little bit of a quick. I feel like I say that every day and then I sort of ramble on for a bit. But I had NFP overnight and it was absolutely all over the shop. And it was obviously a little bit of a little bit of a late one as well. So anyway, let's jump into things. I'll start off with gold here because. This is, I mean, look, metals as a whole, silver was outperforming gold yesterday, but gold, the big level that everyone was looking at was at 5,100. Obviously, even just more recently, in this little consolidation period we've been in this week, 5080 was a bit of a trigger point there. Previous bounce highs of 5,100 took out the top there and really only lasted a few moments and even started to sell down prior to the data coming out. Once the data did come out, it did absolutely dump, but as you can see, the recovery bang straight back up there. So it's honestly, it is a very tough position to call metals at the moment because you got quite a few sort of conflicting sort of bits of price action, really. I mean, look, in one regard, you've gone up above 5,100. This is more like because this happened prior to the data. I feel, and so many people were looking at this level. I feel this would have been the whole sort of like, hey, if it breaks 5,100, yeah, we're going to 5,300, or I'll stay short as long as it stays below 5,100. And so you'd have probably a fair few sort of stops sitting up here. You'd have maybe even some long entries sitting up over here. So they kind of sort of feed it up there, sort of trigger those sort of stop losses, those long entries, and then just dump it straight back down. As I said, they dumped it down from 17 down to 50, so 60, $70 prior to the data. And then when the data came out, it just dropped like a stone. You can see on a lower time frame here, this is when the data dropped out, dropped from 83 down to 20. But as you can see, pretty much straight back up to recovery there. And obviously actually overtook that level. So there's a couple of things to kind of unpack with that, and it's kind of like, well, everybody was waiting for this bit of data, and it was a strong beat, so it was fundamentally positive for the US dollar, but of course then you've got the US dollar being absolutely blasted recently. Admittedly, and I've said the last couple of days that it's been sort of blasted off talk, jibber jabber, whatever you want to call it. Bessent coming out and saying, "Hey, don't be shocked by some bad numbers," and so the market dumps the US dollar based off that one line, and then it turned out to beat it threefold. So where's the data here? We got the numbers out. Here were the numbers. 48 previously, that's revised from 50. 66 was expectation, came in at 130,000, double expectation. Unemployment rate 4.3% down from expected 4.4, previous 4.4. This kind of data, remember we had this with Aussie just the other week. Aussie was a little bit better. It went down to 4.1 against 4.3, I think. And the jobs numbers still, it was just a big beat above expectation. Admittedly, look, Aussie had some other factors going for it, but that was a very, that's a currency positive bit of data. And non-farm, like, second tier, it's about equal with CPI. So it really sort of threw a bit of a spanner in the works with the market because the market's so like, let's dump the dollar, buy gold, it's going back up to 5,300. And then you've got technicals saying, hey, hold on, wait, sellers are sitting here. You got fundamentals saying, hey, look, you know what, dollar's not quite dead yet. And so it just really doesn't know what to do with itself when it's sort of bouncing up and around, up and around. A couple of things that I sort of feel potentially with this is that everybody was looking for this move here, even myself included. It moved down to 4,800, gives you a nice structure of a ascending triangle, and then maybe off to 5,300. Like I saw a lot of people sort of start to sort of come out with this analysis. And again, sort of like if people are sort of short based on the idea of coming down here to then get long here, well, where their stop's going to be, the stop's going to be up here first, hence the drift up, take out the stops first there. So, fundamentally, it probably isn't quite ready to go. From a technical standpoint, look, it opened, if you have a look at this on low time frame, open up and just drop like a stone today, consolidating at the lows, but no follow through. So if you look at the other day, this is another 10 o'clock candle that we had the other day. opened up, bang, sold down, no follow through, and drifted back up over here. So I feel unless you sort of comfortably break through 5100, we could just be in for a little bit more chop around this area. So maybe a push up, maybe a little bit of a drift down towards 5,000 or so, um, with the idea that potentially, I mean, let's pull this line up over here. The longer this holds up over here, the higher that this, the higher this level comes to, just in terms of sort of like making contact with this. But I still think that's potentially the play. I think the fact that sort of fundamentally it seems dollar positive. I'll get onto the dollar in a moment with how it sort of played out. Whoops, I'm not clicking the right things this morning. That's still kind of the play I feel we could have. So maybe around mid 49s now, just given the fact that it's lasted up here a little bit longer. We do have a little bit of a sort of support coming in through here. Whoops, geez, well, I'm not clicking anything this morning. So a little bit of a support. Let's actually get rid of that. Let's make it a zone. Little support coming in through here. I think comfortably you need to get a close down under 50.40. As I said, at the moment it sort of dropped like a stone, like it was a bit of a gap up and then dropped like a stone, but as you can see, it's starting to try and drift back up here again, which is basically the same sort of price action we saw last night. Sell down, buyers step it up. Sell down, buyers step it up. So, unless you can comfortably break above 5,100, I think we might be in for a little bit of a drift here, just based on the fact that the dollar did get a bit of a bounce, does have some sort of supporting data, so it's not necessarily ready to go, in my opinion. But yeah, we could see the fact the lack of follow through on this open. I could see this sort of drifting back up around here, but it's hard to sort of call it to sort of say, hey, we're going high, because if we get onto higher time frame here and we sort of say, okay, look, apart from the fact it's mad chop, if we look at that sort of a very basic three move, we got a high, found resistance, come back, find support. We're in this third leg here now. At the moment, it looks like this has failed, so the emphasis is back on this low, this bounce area down here, to sort of see a bit of a turnaround like that. But the question is this third leg here done? So as you can see, it's absorbing this little sell down pretty well here. So should we get back above open, so back above sort of 50.86, then realistically testing the highs is probably the reasonable bet, and then you're on to something. Whoops, not that actually. Something like that. Should this sort of go back past 50.80? So, and then you're sort of testing to see, are we going to get continuation? Are we going to get a double top? Are we going to make a little range around this area here? But for now, the areas I'm looking at are above sort of 50.86 or so, or below 50.40. Below 50.40, I think it really does open it up. It's got a little bit of a channel sort of forming here. We've got three touches down the bottom, lines up pretty well with the top side here as well. Not perfectly, but not too bad. Enough to sort of say, hey, look, it is, high, low, just didn't come here, but low, high, bang, bang, bouncing around through here. So I think sort of really, if you break down underneath 50.40, you've broken this channel, broken this horizontal. There's a couple of little levels through here, like 50, look, 5,000 is your round number, but it's just chop through here. So if you really want to sort of get anywhere further, that's what you're kind of looking for underneath sort of 49.80. And then the problem with that then is you're butting straight into this rising support. So as I said, I think unless we sort of go past 50,100, then we do have some sort of drift down here. But I do think ultimately that's probably the play that we are going to get. We are going to see some more upside. But the fact that you've taken out the stops, you got a fundamental reason for it not to break out at this point. Should we see the flows take out 50.40, then I think we could be opening up to a test down underneath 50. Because, again, sort of like if the game is just to sort of basically sort of like headfuck everybody, for lack of a better word, what have they done? They've taken out the stops up here. Well, this is a very strong support through here. There would be a lot of stops under here. There'd be stops under here, stops under here, and stops under here. So should you sort of come down and wipe all those out, then you can go, okay, same like we saw here, taking out all the stops, bang, let's go, and then sort of move up over here. So I think sort of like realistically, the price target of a downside move has now been not negated, but sort of been reduced a little bit, just on the idea that obviously, look, it is trying to sort of break higher. It's just that, is it going to do it right now? That's the question. Is this about to go right now? And fundamentally, you probably say no, because the dollar did bounce off the 61. It's got some sort of stronger supportive data. So there's reason, air quotes, justification for this to sort of come back down a little bit, but not necessarily to completely roll over and break. I mean, look, you come down here and test 49.30, then I think, yeah, there's probably some more downside to come, because then you're breaking this big bounce, sort of support. But as I said, I think that that's probably the play to the downside here. So underneath 50.40, be looking for potentially 49.90 and then 49.50 for the downside targets there. All right, moving on. So I'll have a quick look at silver, because silver actually sort of looked like it was sort of outperforming gold a little bit yesterday. Well, it looked like it was, because it was outperforming gold yesterday. But a couple of interesting points of where this stopped was from the very highs up here. So all-time high, down to the second wave lows. So this full sell down move here came back up 38%. Excuse me, 38%. Not this one. Oops, what am I doing here? Bank this out here. That's the lows here. So 38%, as you can see over here. This is also, if we remember, around the 38% in which it rejected from last time. And, we're just basically updating that fib. But that, as a silver bull, would have you a little bit worried, I would say. Just because we know that 38% is a strong sort of continuation. A little bit of a sort of support through here. I mean, this grinded along the side over here, but technically we have a retest of the underside. So it does sort of look like it may want to sort of come down here a little bit. If we zoom in a little bit more with this as well, we've actually got a lower high that's starting to form here now, as you can see as I talk, and that it's trying to sort of take out this low. But same with gold, we want to see that follow through. But this is on the 1 hour. What's a 4 hour look like? Yeah, 4 hour, I mean, yeah, it's not really much here. We've got a little bit of a negative divergence through this section here. There's that little line and draw thing. Though with these things, I've noticed more recently, we've got a couple of alerts going off. Very slight negative divergent, and it is under 80. So it could be that we see this thing roll over a little bit here. But again, same with gold. I think that sort of downsides for the time being are just a little bit limited. Oh yes, the other thing I was going to say is this actual second drop down here. Look at how well this lines up here. This is on the 78%. So where's it gone? In this purple here, 78% drop down of this second wave here. They come like within a couple of cents of each other. And as you can see, now it's starting to reject and sort of drop and take out the lows. So it's really sort of, I mean, silver will always sort of percentage-wise outperform gold, but yesterday we saw it act better, bullish than gold. Here we are seeing it sort of take out the lows, and that's overnight lows as well. So yeah, look, I could see this sort of potentially coming back down. First part I'd be looking at is maybe 79. We do have a little bit of a zone through here. Should this sort of break through 80, 70 or so. But as I said, look, if gold sort of does a little bit of a shake, I think sort of, silver's going to go with it. It's not necessarily, hey, we're going all the way back down over here, but the fact that you've got this little sort of rising support, negative divergence, taking out the low, I think this is one of the things with the negative divergence as well. You need to get that take out that first drop low, which is what we're seeing now. But again, we just want to see that follow through because it's been very resilient. It gets a little bit of a shake and then bounces straight back up. Which if you unpack the idea of that, it's just that obviously buyers are happy to give it a shot. Each time, bang, we sell down. You're not seeing this kind of stuff. Everybody just got out of its way. This is kind of a bit more just like, okay, drop down a bit. Let's do a little bit of a test. Are the buyers here? Boom. Are the buyers there? Test kind of thing. So, I don't think it's necessarily coming down to these levels at this point, particularly if it can sort of rally up around here. But just given how it's looking at the moment, we have a little bit of a zone through here, and it just seems like pretty much anything. It sort of sells down, but then very quickly finding some support as well. So are they just sort of trying to look for stops? That's the question. I mean, we've just bounced 70 cents right now with it all. So look, it is a pretty sort of tough time to be sort of calling what direction metals are going because, as I said, the data last night actually was dollar positive. So we should see some some firming up of the dollar, some peel back of some of that sort of like, oh, let's sell the dollar because the job number's going to be terrible. That's what they said, and this is what I said sort of through this is that's not trading. That's kind of just like bullshit justification for stuff. You want actual sort of levels to be respected and flow and the charts, this kind of stuff, not emotional trading is what I call it, where it's basically there's no technical analysis that can be applied to it because you're not dealing with anybody of a rational mind. It's just people like, oh my God, the headline said this, so let's dump it, dump it, dump it, or buy it, buy it, buy it, in whichever case you're kind of looking at. But I mean, look, at the moment we are seeing lower low here. So unless this thing flips back up above sort of 83.40, I'd probably expect this move to sort of carry on a little bit. Interested sort of to see what happens. Probably I would say around this sort of 80 area. Downside 80, 78, just call it 79. Around these kind of areas over here. Take out a couple of the sort of support levels down here, and then maybe look for a bit of a bounce sort of maybe down around this area over here. Again, look, it's pretty much, whoops, it's pretty much the same as I was saying yesterday, was it? Yeah, yesterday, downside target here, till you get a close underneath 77.50. Realistically, I think there's a chance that we just sort of find some stronger support down here if we get down to it, and then sort of maybe rally back up to 83. I think because we've got CPI on Friday as well, I don't think anything's going to majorly break down prior to that. I think, now it's kind of, okay, NFP's out of the way. So, justification for breaking higher, that's kind of pulled back, but we've still got CPI to come. And, there was headlines out pretty much immediately afterwards saying, hey, CPI is going to be the Fed's decider. I can't remember Hassett or Bessent or one of these guys sort of saying that kind of stuff. So I think that sort of a downside may be limited, but I wouldn't be surprised if you get some positions peel off based on, hey, let's dump everything because the dollar's going to de-dollarization, going to get blown apart, yada yada, all this kind of sort of stuff. So while we see a bit of that sort of fear mongering peel off of positions, we see the dollar catch a bid, we see metals take a breather, but I don't think we're going to get major breakdowns till we get CPI, which they've very graciously put at 12:30 on the Friday night. But so short term, I'm probably looking a little bit lower with the metals here. But I see what happens around 79. If we see a bit of support come back in here, then I could just see this turning into a little bit of a range through here. Trap and stress these people out here a little bit. The people that bought the highs, people that bought the bounce. Let them sort of sweat it out a little bit. Bring it down here, take out some stops, and then sort of just see it maybe just start to range between 79 and 83. All right, moving on. I guess we better have a look at the dollar. So we had this one here. Actually, which chart was I using? So this is the chart I was using yesterday, and as you can see, I put a post up as it was coming in and kissed that 68% right down here. 61% right on the line. Like we're talking the bounce up here, which if you look at sort of how this is sort of playing at the moment, this gives you an idea about how much just shop back and forth we're doing. Let's get rid of this for 1 second. The sell down here came back up 61%. Perfect. Alerts are going off. 61% perfectly of this sell down here. Whoops. Then bounces up, comes back down, 61%. Right on the money again. So, 61%, it's kind of like, well, we're not seeing strong continuation because we're not seeing 38% retracement to sort of go, okay, tackle the high, see continuation with these moves. But it's sort of showing that, okay, it's still alive, it's still breathing on the, what's it called, defibrillator, that kind of thing. So, look, the data yesterday saw a big gap up, bit of a continuation, and then smashed into. Bounce, smashed into. So it does seem to be respecting the second line here. So I think a close above here, and then obviously a close above 97 will most likely sort of see a bit of a sort of continue up with this move. If we could put in a couple little zones here, this is probably where we're looking at, which is obviously that sort of wick highs came very close within a couple of points of that there. Let's make this one zone. Above 97, what do we call it, 97.30 or so, then you might see a little bit of a push up over here. Though, again, look, the dollar is just so unbelievably hated, like universally. But again, it was looking okay through this bounce here. And then we had that series of headlines. Like this was Monday, and this was about this period here where it was just dumped. And it was like China wants to they're telling them not to buy the US treasuries, and then Besant coming out and saying, "Hey, don't be afraid by some weak numbers." And so the market dumps and dumps and dumps, and it's just like if you listen to my analysis on the day, I'm saying this is garbage. Like, you know what I mean? Like the people are sort of just using this as some sort of justification to kind of like, oh, quick, let's get out of this stuff, run, run, run. But you know what I mean? What happens? The numbers not only don't come out bad, they come out extremely strong. And this is why you saw that big push up here because people got caught off foot because everybody's like, hate the dollar, hate the dollar, hate the dollar. And then it comes out super. It's like, oh, okay, maybe we have overshot it a little bit, hence the big push back up. But as I said, second wave, third wave down of selling, you've still got people going, I don't care, I still hate the dollar. Give me strong job numbers, still hate the dollar. And what do? They use it as an exit situation. So they're not saying, hey, you know what, let's carry this. They sell into it. Second effort, that's fine. Give me another shot to sell. Bang, they sell into it. So what you kind of want to see is this sell back down, second sell back down. Are these like the exit positions of like filtering out the last of this short-term bearish move with the dollar? And we'll get that by going above 97.15. So I put a little alert there. I think I've run out of all the alerts on this stuff. So I've got to fix this up here. 1 second. Yeah, we've got one more alert here. Anyway, we've got to say 97.15. That's going to be, look, we're going to say short term dollar bounce play. No, short term dollar bounce play. So above 97.15 and that short term, because, people have used it to sell into, they've used it to sell into. Obviously, market bought it back up, market bought it back up. So you're getting this tussle between the two over here. But what we want to see is, for upside, is a depletion of the selling that's still pushing down at the end here. And that'll come from above 97.15. And should we get that, that'll probably, as I said, see a little bit of a drift higher. And with that little bit of a drift higher, we'll probably see that little bit of a cooling off on metals there. Alternatively is obviously, you find that this just sells into, it respects this falling resistance here, unable to get back above it, and then we sort of really are sort of testing back down over here at the lows. But that's not my base case, just based on the idea of, how positioned the market was for it and how the data came out. I mean, that doesn't necessarily mean anything at the moment, but you know what I mean? Just based off that factor of that overnight, I want to see how Asia responds to that. Because although these markets are 24 hours, you do get the sort of reaction each time the next market opens. So, for instance, if we get sort of strong Aussie data in the Asia session, you'll get your immediate reactions. Things might cool off a little bit, but generally when the US open and when the European sessions open, you'll get that resurgence of waves of sort of price action. So I think it'll be interesting to sort of see, but certainly I think above 97.15, we might see a little bit more of a drift up and a little bit of a pairing of those of that sort of dollar weakness that we saw in the early part of the week. All right, ticking on, and Aussie. Aussie was absolute madhouse through that period yesterday. So we had that. We had one of the, I say the Fed, one of the RBA speakers yesterday. I don't even know who it has. Hauser or something, I think his name was. We don't typically have this. It's not like Fed speakers. Like you get Fed speakers every sort of 5 minutes, sort of saying one thing or another. We don't typically ever have outside the press conference after the after. Sorry, one sec. I say a bit more coffee. After the press conference and that, we get sort of a bit of bullet talking and that, but we don't typically get a lot of uh, sort of speakers and that sort of happenings. Certainly nothing that moves the market the way that this did. So it was already holding this pullback here. I mean, that was the trade I was looking for. I was looking for a pullback down to these levels to then go through and obviously missed the boat with this one here because they just exploded it off. He basically came out sort of saying that they're going to do what they need to do, what needs to be done, yada yada. Tough talk on hey, basically, translated down, they're going to do more hikes if it requires it, which they will. So obviously, data dependent CPI, this kind of sort of yada yada. Anyway, whatever. That gave us a big breakout here. Backtest. Look at this. This is a good way to look at these backtests, I find. Look at how much this came to the absolute point of that back test and that. And sort of basically people said that's enough for me. There's no sort of deep correction back test. Obviously, disregard this part here. But, deep correction, there's no deep correction right to the point and boof, people sort of fire back up here again. That's generally a good sign for more upside because people are like, whether maybe they're short at these levels here and they're just closing their shorts, it really just exploded. It didn't waste any time, took back off over here. NFP, different story, of course, but if you look at how fast this reacted, put it on the 2 minute time for Aussie, look at this reaction. 2 minutes, it drops, 71.10, so it drops 40 points. Within 10 minutes, it's back there. Not only does it do this, it flies up to the top side. So this is another part that I sort of look at in that, which is called the data drop point, which is I've coined myself, which is basically when you have a big bit of market moving data and it sees a move down in one direction and very quickly eats it up. Once you break that, that's a very good indicator that you're going higher because it's kind of taken that sort of market moving bit of data and said, hey, look, I don't care about that. I'm going to absorb that, takes it straight back up, wow, boof, and goes back off to the top side. And as you can see, it came down a bit more of a deeper kind of correction this time onto that sort of bigger zone, held that, and boof, and on our way we went. Get back onto a decent time frame here, 4 hours. So look, it did sort of move right out. This is a little bit of a flag through this area here. You can see this pretty much kind of near enough, close enough kind of thing, kind of completed that move through there, and that's put in a little bit of a cap on it just for now. So I'll just put a little zone here. So above 71.40, see continuation there. I wouldn't be surprised, particularly as I keep saying, sort of, potential with downside with dollar, so downside with metals here, and if dollar does get a little bit of a rally, that we may still find a little bit of a range up the top over here and that. I don't necessarily think we're coming down here. Certainly, look, if you do get that sort of that move down here, then we can look at these lower levels over here. I'll just put this over here for what it's worth. This is definitely, that's not the base case at the moment, unless the dollar really picks up steam. But certainly they're the levels you'd want to see closing underneath to see any sort of continued move to the downside. But I wouldn't be surprised if we sort of start to maybe build a bit of a range through this area over here, and just sort of just chill here till we get that next bit of sort of market moving sort of information. Take the, whoops, not that one. This. That's what you're looking for a breakout to the top side there. So I would say even a close down underneath sort of 71. I think you're probably going to find some sort of some buying support into this area over here. Should it sort of come down over here, I think unless you sort of get down underneath 70.60, I think it's still very much bullish by the dips kind of thing. But as I said, if we do see the metals come off, if we do see the dollar run a little bit, then I think there's definitely some short-term sort of pullbacks to maybe around that 71 kind of level, what's it called, 70, 90. So as I keep saying, 90s always play well. and that's what we're sort of seeing here as well. Where we stopped, and you see, we stopped in the 20s. So, 20s, 60s, and 90s, recurring numbers for the Aussie. I've always sort of found, but I don't think we're necessarily about to explode up and go higher here. I think we had the headline yesterday, we had the data overnight, potential with the sort of dollar firming up. If we do see that, I think sort of maybe sort of see what the buyer's reaction is around this 70-90 area. But for me at the moment, this is just a bit of a wait and see from this point here. I do think we probably are going to go higher. The longer we leave, that last thing I'll say about this, the longer that we sort of consolidate out the top here, you call it's price acceptance. It's accepting the fact that it's above 71. So if we do start to range here, then that really does put the pressure on the breakout above 71.40, and then we're looking up to 72, 70, 72.80s to 73. So that is the direction that I do reckon we can go. Just obviously, I think maybe need to sort of filter through a bit of a sort of chop in this period here, particularly if, I keep repeating, the dollar does find itself a little bit of a bid. All right, and finally, just a quick look at the yen as well. So this is actually sort of playing reasonably well. I mean, look, this was the kind of plan from the weekend to have this sort of like chop zone build up over the top over here before potential breaks much higher. Held the sort of highs very well, came back in, held the supports very well. There was a little bit of sort of funny price action around that NFP because obviously we had the NFP print, but then there was like this absolute just smashing of the yen. Like, have a look at this on very quick sort of time frame. So look at this, like reaction, reaction, reaction. So it was really chopping all over the place. So this moving down is obviously yen's strength. And I was watching sort of UJ, and that dropped like sort of 100 points or something like this in a couple of minutes. So that's kind of like not normal price action, but obviously, as you can see, more or less just got filtered out through the rest of it there. So look, for time being, I mean, look, while it's up above 108.40, it probably is still a bit of a buy. And then sort of like look for targets up around that 110. But pretty much what I'm sort of looking for is a bit more of a sort of consolidation here, and then a break above 110, 111 to move up over there. Depends. Look, again, look, it's so high that, and these kind of price actions got to keep you a little bit sort of skeptical or worried for the longs, because when they can just pull a trigger and then drop 100 points or whatever it dropped, even though it did sort of get absorbed very quickly, it does make it a little bit of a risky sort of trade up over here. So I think sort of tight stops on this one, if anything. But really, I'm looking for a close above 110, because I do think you probably have a couple of 100-point move to the top side should that sort of move come there. So just a quick one on the yen there. Not really interested at the moment. All right, and that is it from me. A quick look. I think that's about it for the news for the today as well. Got another speaker for RBA, so 3:45. Inflation expectations. Of course, we don't get a forecast of that because it is the expectations. That's coming out at 11 o'clock. So we've just had that. So what did it come out at? Aussie's a little bit on the bid, so maybe a little bit. Oh, yeah, expectations. Yeah, so Aussie's a little bit on the bid because expectations are probably still a little bit higher with inflation. So really kicking goals on the home front there. Tonight we got unemployment claims from the US. That's looking to tick down a little bit. Maybe if this comes back in around 200, might get a bit of a bid on the dollar. It did have a little bit of a spike up there, but not really anything too major. 230 it got up to, so it's been around those 200. That is a bit of a jump up actually. Anyway, that's about it for the data. And then, of course, tomorrow night we got CPI. So what's CPI looking at? So looking at cooling for CPI. So you might see dollar a little bit still weak based on this, just because if we are sort of pre-positioning for cooler CPI print, then obviously that's a bit weak for the dollar. All right, that's it from me.